Let's turn now more specifically to what else is happening in Manhattan. Manhattan office rents could rise by as much as 10%, according to data compiled by Colliers International. It's one of the largest commercial real estate firms, and based on a recovering global economy, the company's economists predict New York rates will climb and availability will drop. The firm's tri-state region chairman, Robert Freedman, says, "Don't miss this market," and he joins us now in studio. Welcome, Robert. Good to see you here in studio. Thanks for coming in this Friday.
Thank you very much.
Now, so for the first time, you are telling potential tenants since the credit crisis started that you don't want to miss this market. Tell us a little bit about what you expect for rents here in Manhattan in the coming year.
Well, after the capital markets meltdown, you had total disarray in our markets, and any leasing activity that was being generated was from pent-up demand in the previous cycle, deals that were deferred because of the capital markets meltdown. And now, for the first time, we're seeing growth. We're seeing availability rates start to ratchet down, and we're seeing employment growth, which is the key to our industry. You cannot increase rents without reducing supply, and you can't reduce supply unless you put more fannies in the seats. You need people. People consume space.
Well, let's take a look specifically at the trends for the fourth quarter. You just released this. I think we have a chart here of what was going on in the fourth quarter. I think we saw availability rates, as you had mentioned. We saw Midtown North and Midtown South. Both of those were, the availability rates dropped compared to the same time next year. But downtown Manhattan still suffering at this point.
Downtown Manhattan will lag this recovery, but conversely, downtown Manhattan is probably the most compelling scenario of all the markets, with the new developments downtown
and this is for commercial tenants.
This is for commercial tenants.
Let's talk about landlords. What are they doing to prepare for the next year? Are we starting to see them hike their lease rates?
No, but in what I call the sequence of market recovery, before rental rates increase, landlords to induce tenants to enter into a lease have to package what we call concessions. Tenant improvement allowances, landlord contributions towards work, free rent, etc. That starts to skinny out. And then in the next sequence, the face rate of the lease, $50 per square foot, $60, that then starts to trend up.
All right, let's talk about just some of the macroeconomic factors involved in what happens in the commercial rental space here in the city. What do you expect for employment here in the city? I mean, Wall Street is a big driver of employment here, and there are a lot of factors that are putting pressure on profits in that particular sector, but you actually expect employment to improve here.
We're projecting somewhere between 17 and 20,000 new jobs in the office sector. Now, historically, Wall Street has always been at the leading edge of the recovery. Their employment is up a modest 1,000 people. It's virtually no employment rise, but they confer this massive wealth effect on the business service sector, law firms, management consulting firms, accounting firms, tech, and they're the chief beneficiaries. Even if Wall Street doesn't staff up dramatically, Wall Street's transactional volume will generate more and more revenue, and business services will staff up as a result.
And then quickly, what are some of the trends that you're seeing overseas? I know that in your thesis for rates or rents moving up in the commercial space for next year, you cite the IPO market, you cite M&A activity, and you also say what's happening overseas.
Well, it's very interesting. London, historically, has always outperformed New York for the most part. In this cycle, I think New York is going to outperform them, both global capitals, both financial capitals. But I think London's being dragged down by some of their neighbors in the European Union, whereas we appear to have a much more robust and vital economy.
All right. Robert, thank you so much for joining us. Robert Freedman from Colliers here in the studio to talk about the commercial rental trends for next year.